cyber insurance is the number one risk to businesses. My name is Joe Erle. I'm with C3 Insurance. People think that the cloud is some kind of magic place where you can't get hacked. And people don't know is that if I take in your information through my website, I'm still responsible. Look at the CrowdStrike incident with Delta. The judge is going to let Delta actually sue them, but they limited their liability to single-digit billions. Delta lost $500 million. They're saying, well, we can give you 9.9 according to our contract. So I think people overestimate how much their third parties are going to take care of them. If there's one thing that I think people should take advantage of is TikTok. Even if it's like a virtual presentation, it gets people to start thinking, how do we talk to our employees? How do we talk to the press? There's all these questions that we need to answer. I would say to MSPs out there that if you're not offering cyber insurance to your clients, you're doing them a disservice and you a disservice. An insurance company is going to get involved with that company. And if you're not a part of that conversation, then you may get boxed out.
Joe, welcome to the MSP Insider Show. Would you please tell the audience who you are, what you do, and why the hell that you do it?
My name is Joe Erle. I'm with C3 Insurance. I'm a cyber insurance broker. I'm here in San Diego. I do this because I feel like cyber insurance is the number one risk to businesses, and it's where I can make the most impact.
Okay, awesome. The way that we open the show and sort of the really only formula or framework for this is that we open the conversation with a question that was left behind from the previous guest. And it kind of picks up on the tail of my question that I open every show with. But the question for you comes from Dave Sagraves, who's the founder of MSP Growth OS, and dives a little bit deeper. He said, what is your why? What motivates you? And why you do what you do?
I'll have to thank Dave for this question sometime.
Yeah.
My why is to make an impact, to help businesses grow so that they can provide for their employees and those employees can provide for their families. I'm a family guy. I've got 2 kids, and I feel like my why is providing for them and my family. And if I can protect the business from getting hacked so that they can, go on and be profitable and in turn do that for their family, that's where I want to make an impact.
Yeah. And how long have you been in that world? How long have you been doing this?
I've been doing insurance in about 17 years, and I pivoted to strictly cyber about 5 years ago.
Okay.
Back in like 2021, when you probably saw well, that wasn't 5 years ago, 4 years ago.
Yeah.
When things kind of doubled in the amount of claims and cyber hacks when everyone was working from home.
Yeah. And actually, the fact that you sit on that side of the fence will be interesting as we kind of navigate the conversation, because as all the MSPs that are listening would know, that's really when the conversation started to change and evolve, because, the 5-ish years prior to that, while some businesses were maybe gaining interest in taking out policies and coverage, it was still so flimsy as far as like the process itself of either underwriting it or, what you had to attest to or any of those other things. But so much of that has really ratcheted up or clamped down, in these last 5 years, where, for example, the questionnaire used to be like a single page with 3 questions on it versus 38 pages with 38 questions each. To just go through the underwriting process. So I'm sure you can add some color there.
I don't want to say we've come full circle, but the insurance industry has a short memory. And because the cycle has gone down again from being very strict and very expensive down to where pricing is very competitive in cyber insurance and the underwriting is less strict, we're kind of in a new market where the applications are getting smaller.
Got it.
And there is more competition in order to drive down those prices. However, I would say that underwriters have gotten smarter as far as like how they're underwriting and what they're looking at. They've learned a lot of lessons in the last 4 years.
Got it.
Okay. And they're using tools like AI and scanners and next gen type domain scanners and using big data in order to fill in a lot of those blanks that uh, they wouldn't be able to fill in before.
Got it.
So
Okay. So they can almost like assess the footprint and maybe determine what their risk is from the outside in, and have a more informed actuarial conversation without having to just ask you a bunch of questions and trust and not verify, if I'm
right,
hearing
and
you correctly.
I'm sure your audience has used these tools where you can see if people are using end of life software.
Mm-hmm.
Can you see in some tools if they're using MFA or not?
Yeah.
So the underwriters are doing the same thing,
Right.
and they're armed with those cybersecurity people that work in their back office that train their underwriters in order to get the price where it's supposed to be so that they can insure as many risks as possible.
Yeah. For sure. Okay. Let's dive into the a bit deeper, maybe really even to that evolution of the market. We talked a little bit about how the demand was really driven more from the incline of the MSP, and then insurance just had to sort of like straddle the fence and figure it out along the way, as far as the process of going through the due diligence, if you will, of underwriting the policy or just even transacting that. And the MSP had a strange relationship in that, they were being pulled into conversations that they maybe always thought they should have been, but never were before too, to take care of the insurance conversation. But in things as recent then as like 2024 into 2025, it seems like there are now companies that are beginning to blur the lines between insurance and actual cybersecurity providers, where multiple carriers are now even offering certain cybersecurity tools, as recently as last year. And I guess my question around that is, as we see certain things like that come to life, is does that really kind of create a scenario where some insurance companies become the fox guarding the henhouse?
It's a great question. I would say to MSPs out there that if you're not offering cyber insurance to your clients, you're doing them a disservice and you a disservice, because either an insurance company is going to get involved with that company and then try to sell them EDR tools or email uh,
Mm-hmm.
filtration tools, and they'll have partner MSPs that they'll be recommending. And if you're not a part of that conversation, then you may get boxed out.
Mm.
Unfortunately, I think it's unfortunate. For some small businesses, I think it's actually good that they're getting like a suite of tools, and
Mm-hmm.
that may take the place of an MSP at some level. People that don't already have an MSP. But if the insurance company is going in and then offering all these value-added services, and they can buy all these services at bulk, um, for example, uh, an insurance company at Bay is buying, uh, you know, CrowdStrike and Fortinet uh,
Yeah.
licenses at bulk, and then reselling them as at Bay EDR,
Mm-hmm.
and it's less expensive because they're an 800-pound gorilla, and they can buy those licenses for less, and then resell them as a value add,
Right.
and offer you a discount on your policy too, right? If you're using their EDR, and the email filtration system. I don't think that's in any way like competition, but it's actually a good thing because you can get higher levels of social engineering coverage, which is
Mm-hmm.
where like if someone tricks you into giving them your money,
Yeah.
and they see that a lot of those come from emails, business email compromise and phishing attacks. So if you have this filtration system, they give you an additional limit of basically double your limit to 500,000. So it's kind of a cool feature. But
Yeah.
getting back to the blurring of the lines, on the other side, we're seeing MSPs or EDR companies offering their own insurance. So,
Mm. Got it.
it started off with like warranties, right?
Yeah.
And then, like, for example, Arctic Wolf, they're a great insurance partner. They always are talking about getting cyber insurance.
Mm-hmm.
They happen to have their own cyber insurance company that they basically tout. It's called Cysurance.
Got
So
it.
if you have their Cysurance warranty, then you qualify for their Cysurance policy.
Mm.
So they're bringing insurance in as EDR company.
Yeah.
Or
Mm-hmm.
Article was interesting. Are they an EDR company or they're kind of like a dashboard uh,
Yeah.
for
Right.
intelligence?
Depending on which services you have through them.
Yeah,
Yeah.
yeah. Just kind of like the EDR space, right? Like
Mm-hmm.
Arctic Wolf didn't used to have their own EDR. They used to
Yeah.
sell through channels, and they still do, but now they have
Right.
their own thing, right? So
Right.
it's kind of a
Mm.
common pivot that many businesses do, and it's good for some people and bad for others.
Yeah. What do you think? Because I know one of the things that which I found the perspective to be really helpful, especially if it's through the lens of the MSP sitting in the seat of trying to straddle this fence now, is where um, security reduces the likelihood of an event, but it never reduces the invoice. Is some methodology I've heard you kind of use. Like what tends to be the most dangerous lie then for those tech first leaders that are still clinging to the former, right? They don't know how to navigate that dollars conversation necessarily, even though they're pushing kind of all those acronyms we just talked about.
Right. Um, can you clarify your question? Like,
Yeah.
what specifically are you talking about? Are you talking about like what controls you need to put in place in order to get discounts on your insurance? Um,
Yeah. Either that or the almost like um, the illusion that adding the security components to the environment will then also drive down either the cost of the insurance and or the cost of the services that the provider's paying. Is it like more of a three card money game between, well, instead of paying it for the premium, I'll pay it to the provider to add these tools in? Like just kind of almost maybe demystify the way that the industry is looking at it
mhm.
more through that either broker or insurance provider standpoint.
Yeah. Uh, that's a really good question because there are companies like Resilience that are offering two tiers. They have like a tier where it's like mostly just insurance with some value adds that are equal to um, other insurance companies are
Mm-hmm.
adding, like partner discounts and
Yeah.
maybe some threat intelligence, and then they have like their top tier, which is something that companies can buy separately. That gives you like uh, higher threat intelligence, risk quantification, and a lot of other great tools that you could buy on the market separately. But if you buy it through them, it's highly discounted because you're getting a policy through them. And
Yeah.
I think that's a good thing if it's just like a tool. But if they're like taking over your entire MSP's job, then I don't think that's great. If the MSP can be a part of that and help manage that tool, then I think that's excellent. It's a win-win for everyone.
Yeah, kind of diving deeper into the perception or perspective of that, either from the MSP or the business owner standpoint. Which single control do you feel or see most often convinces those leaders that they're fully covered when they're not really?
I mean, I would say that people think that the cloud is some kind of magic place where you can't get hacked. Uh, like, we're good. All our stuff's in the cloud with all these great third parties. We don't have anything at our
Yeah.
premises. We don't have any servers with any data on it. We're good.
Yeah, like
Like,
shifting the risk just because you don't have it there anymore, even though you really still need to quantify and understand and manage
right.
and detail the risk, even though it's somewhere else.
Exactly. And people don't know is the person that takes the information is responsible for it. So if I take in your information through my website, even if it goes to Shopify or another website, I'm still responsible for that.
Mm.
And I don't think people read their SLAs, uh,
Oh yeah.
their agreements with their uh, Amazon Web Services or Shopify,
Yeah.
uh, any Microsoft, any of these tools. These big companies are limiting their liability to nothing,
Mm-hmm.
basically. Uh,
Yeah.
Look at the CrowdStrike incident with Delta, right? Now,
Mm-hmm.
I heard that the judge is going to let Delta actually sue them, but they limited their liability to single digit billions. So Delta lost 500 million plus,
Yeah.
and they're saying, well, we can give you 9.9 according to our contract.
Mm.
So I think people overestimate how much their third parties are going to take care of them and
Mm-hmm.
how hard it is going to get money out of those third parties rather than
Yeah.
buying an insurance policy and just making an insurance claim.
Yeah. Interesting. Let's go back then to kind of that the disillusionment that's created in the market currently with the difference between the warranties and insurance, right? So like when you think about a warranty, it's more about, this might be overstating it, but it's more like a marketing muscle, the way that it's been deployed in the market, it seems like. Whereas a policy is a legal contract. Can you help us separate the two so that like the real business minds in the room could understand, like the CFO in the back, right? Understands this is why we should consider this versus that.
Right. So the warranties are, in some ways, are like insurance policies, but they're
Mm-hmm.
very limited in scope. Right. Usually they come with like a Kaseya type product where you can buy an additional warranty. So like it's going to include some incident response services. So you're taken care of, showing it's basically backing up the product. So the
Okay.
reason they give you a warranty or sell you a warranty is because they're showing you that they believe that their product is so good that you're not going to get hacked on any of the machines that it's on.
Mm. Okay.
Of course, if it's a hack that comes from one of the machines that's doesn't have, for example, Kaseya on it,
Yeah.
then it's not covered. So
Right.
what do you do then, right?
Yeah. Yeah.
And it's usually that one machine or that one server that
Mm-hmm.
you demoed a while ago that forgot
Yeah.
to shut off or something
Right.
like that. And the other thing that you're not getting when you're buying one of these is you're not getting your lost income. So if you
Mm.
have, the average downtime is about 14 days. If you're not getting income in those 14 days, who's going to pay for that, right?
Right.
Um, you're just going to have to eat it if you have one of these warranties, even if it's
Mm-hmm.
covered and they're providing the incident response.
Yeah.
So you're losing a lot of additional coverages. Like if you're comparing it to a warranty, like I'm not against warranties. I think there's a lot of
It's like understanding your
confusion in the
risks too,
market.
right?
Yeah. Yeah. It's understanding your
Yeah.
risk, but I think like either purposely or um, accidentally or whatever, the warranty people want to look like insurance companies in order
Mm-hmm.
to increase the perceived value to them, and they're not. And
Yeah.
that's what I don't like about warranties is that they're trying to dress it up like an insurance policy, and
Yeah.
it's not. It's basically a way of backing up their product.
Yeah. Yeah. It's like kind of going back to that marketing muscle. It's more or less a uh, a guise of validation, right? So like to reinstill confidence in the solution that you're buying, but with a really small surface area of protection is kind of what I'm hearing, rather than looking at things through the full surface area, which is what insurance policy ideally would be looking at, so that you're fully covered or fully protected or protected differently, up to and including things like you mentioned, where it's like the loss of income, rather than just oops, we didn't deploy the agent type of a, I don't know, paving
And
the
if they
road.
really wanted to back up their product, they would just include it. They wouldn't have to sell it to you.
Yeah.
They
Right.
sell these warranties to you. And I'm not harping on people selling warranties because they're not bad. they're just not insurance policies, right?
Mm-hmm.
And the margins on these warranties are basically like 100%.
Right.
I've never heard of a warranty that's gotten covered. I'm not saying that they're not covered somewhere out there, but every time I heard of someone that had a warranty there, it's kind of like those car warranties.
Yeah. Yep. Yeah,
And you're
where
like,
it sounded good at the closing table, but then you went to use it and you like didn't click your heels 3 times and turned to the left when you walk through the front door, so it's not covered anymore.
exactly. So
Hmm.
hopefully there'll be some case law soon that, holds these guys' feet to the fire. But yeah, I think if people are spending good money for a warranty,
Yeah.
there shouldn't be so much like small print in there.
Yeah.
But you could say that you could say similar stuff to insurance, right? Like we have a lot of exclusions.
Right.
Different companies have different exclusions. It's very confusing, even for the agents.
Yeah.
Like for instance, I was proposing an insurance policy to someone the other day, and I was like, "This is a really good insurance policy. It covers for wrongful collection." And you guys are, I ran your website through the Blacklight
Mm-hmm.
website where it says like what cookies you're tracking and if you're using pixels or not, and it looks like you guys are using those. So this is like really good that you have it.
Mm-hmm.
However, although they cover for wrongful collection, there's a separate exclusion in there just for pixels. So it's like is that even covering for a wrongful collection if you're not covering for pixels? Because like that's where all these claims are coming from. So and then you look at the prices and you're like, well, this one's $8,000. One that actually covers for these privacy violations that might come up because they're becoming very popular right now in litigation circles is twice as much.
Mm-hmm.
You're like, you're looking at all the menu there, right? Like incident response, cyber extortion, cyber crime, they all line up million. But this one's twice as much. Why? Right?
Yeah.
And you need to have like a broker that can explain. So you can make a good risk transfer decision.
Right. And the thing that's so fascinating about that is it kind of illustrates really the true like cat and mouse game of just how critical language, verbiage, and fine print and all those things really are. Like maybe it's not even from the malicious or nefarious standpoint. It really is just like moving the risk mitigation cheese around, but you kind of still need to know, how do I make any sense of it all, right? And
yes.
what do we do with it? God, it makes me love and hate lawyers that much more through that lens, right? Like, oh right. Yeah, we've got the wrongful collection, but not the pixel, and it's over here.
Yeah, my dad used to joke. He was an insurance broker too. That lawyers keep them in business.
Yeah, right.
If you didn't have all these lawyers, we wouldn't need general liability or cyber insurance.
Right. Yeah. The semicolon was in the wrong spot, so you're exposed, kind of a thing.
Yeah, or now it's covered because the semicolon was in the wrong spot. Like right. Whatever. Yeah. Tie goes to the runner in insurance. If the language is vague, usually if you have a good lawyer, right?
Yeah. Right.
The insurance companies usually have good lawyers too.
Yeah. So. As we think about the way that coverage is kind of moving, right? Because we've sort of identified that there are multiple layers to all of it. There's the what risk are we mitigating for, what technology is out there that we need to do all these things for, and then there's the underwriting, the insurance, the client, MSPs, the middleman. So like coverage is more or less almost like that game of Pong, right? It's just moving around the bottom trying to catch the ball as it bounces through. And coverage has kind of been moving further and further to the left of either the boom or the kill chain process. Like what helped the audience understand what that kind of means as far as like where the coverage is moving and or what to be looking out for or paying attention to as a result of the coverage almost inverting and like leading the way versus playing catch up, or even is that true?
Yeah, it's frustrating for me when I have the clients aren't taking advantage of the left of the boom services because we have like tabletop exercises, got free assessments, all these, nice to haves, right? That are part of like the sales process when I'm telling people about this, but no one's taking advantage of them. And if you are a mature company when it comes to cybersecurity, you should be doing that stuff. You should be doing, the employment and awareness training, the tabletop exercises, and uh, all the other stuff that mature companies are doing.
Yeah.
And if you're not taking advantage of those, you're basically leaving money on the table, because those things on the open market are $5, $10, $20,000 for these assessments and tabletop exercises. And
Yeah.
if there's one thing that I think people should take advantage of is like a tabletop, even if it's like a virtual presentation. It gets people to start thinking, especially for small business, like, who do I call? What if I can't use my phone? Who's this? Who's that? Who's that? How do we talk to our employees? How do we talk to the press? Who's in charge of talking to the press? There's all these questions that you need to answer. Who do we put on retainer? Like, who's the lawyer that the insurance is going to pay for? Can we get, if we want our own attorney to be there for us if there's a claim, how do we get them as an approved vendor so the insurance pays for them and we don't have to pay for them? So there's a lot of questions there that you want to answer before anything happens. And in addition to that, there are some great insurance policies out there that have good wording where, like, if there's even suspicion of a claim, like a suspicion of a hacker being in your system, that they'll give you money to investigate.
Like, not preventative maintenance, but almost the Spidey senses clause.
Yeah, because you don't want to have to wait. The insurance companies that do this, they know, like, we want to get to this early. We don't want to have to wait till like you're completely ransomed before. We'll get the person when they're like they've compromised your email, but before they've got the keys to the kingdom and been able to ransom you.
Encrypted the entire thing.
Exactly.
Yeah, that's interesting too. It almost kind of paints this picture of like where things are converging to, and like what that convergence point looks like even today in 2025, hypothetically speaking. So nothing that anyone's going to hold your feet to the fire for, but like, where do you see things going almost like 2027 as it relates to convergence? So you've kind of got brokers, you have MSSPs, you have vendors with all the other acronyms, right? MDR, XDR, all that other stuff. As things converge more into that single pane, maybe even the Arctic Wolf example where they kind of have so many things underneath one umbrella, how do you think that's going to reshape like premium models and like breach response SLAs and stuff?
Yeah, it's interesting because I think with another guest that I just listened to, you were talking about the bundling and unbundling. You use the example of like the cable company used to have like 300 channels, and then it became streaming, right? And now the streaming companies are bundling again. So I think we're seeing something similar in the insurance space where we're experimenting with what is selling. Like, what do customers want? Do they want an all-in-one solution? Or do they want to buy insurance from their broker, like a specific cyber broker, and then they buy their other insurance from some other specialist broker, right? Or do they buy their insurance through their MSP, right? Like a channel partner, be like through Pax8 or something like that, right? So I think we're going to see a convergence of some of this stuff, like where security threat intelligence companies either are going to be able to provide a discount for insurance if you use them. They're going to have certain partners that they bring in, or it's going to be like one company where your insurance and your security tool are like one thing. Like, you use this safe, and we're going to give you insurance that goes
Yeah.
with it because we're so an insurance company owns us, and we know our stuff so well that this and this we can insure you without even you doing an insurance application because we've like scanned everything.
Yeah. Right. So their X-ray vision's getting better, and so that they can make more informed decisions is kind of what I'm hearing in that lens.
Yeah, yeah, and um, I think there's a place for everyone in this new market.
Mm-hmm.
It's just rolling with the punches, and
Yeah.
I think there'll always be a spot for the specialists, the
Mm-hmm.
people that are in it every day and adding a lot of value.
Yeah. So one of the things that even I felt guilty is probably not the right word, but I felt susceptible to when I was still sitting in the seat when I was the individual at the MSP that had to review those requests for like, hey, our policy's up for renewal. Like, help me fill this thing out. The strange part in the way that the client industry evolved was more from where they got away with just checking boxes for so long that you couldn't really check the boxes anymore. But then like the MSP had to be the one to be communicating like, hey, we can't just do this. Like if you say you have MFA, then guess what? You like actually have to have MFA, and here's what it takes to do it. Can you walk us through the other side of the situation now? So this would probably be the more right of boom versus left, but like walk us through just any situation where the client ignored the MFA requirements and then saw X happen. Maybe X's renewal rates tripled because you didn't do what you had checked the box for, or there's a breach, and as a result, something else is the outcome.
Yeah. It depends on the insurance company. Insurance companies, I know they're like the evil corporations, but they really do try to uh, pay when they're allowed to pay.
Mm-hmm.
They have their own attorneys that will tell them you can't pay for this.
Yeah.
But they every experience I've had with the claim, the insurance companies like wanted to pay for at least the main claim. And then there's other stuff and expenses that we have to argue for our clients.
Sure.
And with the MFA example, there has been some cases with it where a company said they had MFA and they didn't, and their claim was denied.
Sure.
If a company has MFA on most of their stuff and there was one system that didn't have MFA that they either didn't know about or didn't get around to adding, I think the insurance company is going to cover that. But if they are blatantly saying that they have MFA and then they don't, then I think that's going to be a long road for that client.
Yeah.
And it would be very hard to insure them if they had a claim where they said they had it and they didn't.
Right. With regard to almost like documenting history along the way, are there certain things that categorically, MSPs or maybe just the clients, but MSPs aren't great at as far as like building that breadcrumb trail, right? To almost pre-build the due diligence case along the way of what we're doing for our clients. And almost to that point, maybe like you had said, where, hey, they agreed to MFA. Here was the quote. We signed it off. We did the major push initially, right? We got 80% of the environment deployed, but then they had these traveling folks that had to come back to the HQ, like whatever the scenario is. But a lot of that kind of happens invisibly in MSP's world today. Like what can we say to those MSPs about how they need to start thinking differently about their everyday actions that they're taking for clients in such a way that builds the case to better protect them and their liabilities and or the client that they support and their liabilities?
That's a great question. MSPs and insurance carriers should be working together, right? Because they're all there to protect the client, right? One is the MSP part is risk mitigation, and the insurance part is risk transfer for the stuff that we can't stop, like the claim that the hacker that inevitably gets in, right?
Right.
So what we have to do is work together, right? So if the MSP's never seen the insurance application, then that's not very good because the MSP doesn't know what the client has attested to. And if the MSP doesn't know what they've attested to, then they can't, help them get all those things checked off, right? So
Yeah.
The MSP should be asking for that insurance application, saying like, "Hey, you're saying you're doing this, but you're not. Like, you could have your claim denied, or
Yeah.
you can get your insurance policy canceled because you're not doing this stuff." So
Right.
I think if there's more back and forth with the insurance agents and the MSPs, it would be best for the client. And then the other side of that is, the MSP is filling out the application. They need to have their own insurance in case, like,
Yeah.
they say that they're doing something and then that part of the contract gets canceled because they were planning on doing it, and now they've attested to something that never happened.
Yeah.
So
Fascinating.
it protects both people.
Yeah, that almost makes me rethink your Shopify example a little bit earlier, where whoever's taking in the information is responsible. Maybe add some clarity around, maybe it's responsibility, maybe it's liability, maybe it's just ignorance. But now I'm the MSP and I'm filling that out and attesting a certain way. And it is one of those things where like something else came up and we never got around to sending the quote or doing the project for MFA for that client. Is it pretty black and white currently on like where that liability falls? And then
I would tell the MSP never to attest. I think that's the job of the CFO, the CISO of the organization.
Got it. Yeah.
Because they shouldn't be responsible for what they implement. Even if they're hired to do it, I don't think they're hired to take on that attestation liability.
Right. Like the advising to that individual, but not the actual attestation necessarily.
Right.
Right.
And I think that
like the fact finding.
Right. Yeah. They're doing the work for you, but you need to check it if you're the IT manager or CISO at the organization.
Yeah.
And organizations shouldn't give the insurance application to like the lowest person on the totem pole either. Like that becomes part of the contract, that application.
Right.
So, and MSPs can do a lot more to, protect themselves with their service level agreements, with limitations to liability and other clauses that can help protect them in case they have a claim, right?
Yeah. Yeah. For like, because things change so often and sometimes because it's overwhelming to try to even read through, let alone fill out some of that paperwork. I imagine there's scenarios where coverage is ultimately denied, and the way that would feel to an owner or founder is probably almost like some sort of existential crisis or verdict. Like, how does it work to coach that individual through almost like the shame spiral they're in, and realize that it's not the end of the world? It's just a matter of maybe not knowing what you didn't know, and then re-engaging the process through more of an advised approach.
So I had a client that didn't. Your question is, if I had a client that had a claim that wasn't covered, what would I tell them?
Yeah, like if you had a client and their initial coverage maybe was even denied, and it's sort of like the panic sets in, right? How do you coach them through either working through it and finding a way to get it done, or not seeing it as so black and white, because it's really probably just a matter of having checked the wrong boxes and or not putting a mitigation plan in place somewhere.
Right. Well, I think the first thing we have to do is get them back to business, however it is possible. If we can use the insurance company to at least hire the incident response people, we're going to at least get a discount on the incident response stuff because they buy the hours in bulk. We're going to get professional advice through the breach counsel. That's all going to be privileged.
Mm-hmm.
But if it's not covered, those are a lot of expenses.
Sure.
So for a big claim, that could be problematic. But what I do see, I don't see that a lot
Mm-hmm.
where the claim's denied. What I do see a lot is that people don't buy enough insurance. So
yeah.
you can have a $2 million claim and it's completely covered, but you only have $1 million insurance. So I think a lot of people see this $1 million as like standard, but
Yeah.
$1 million doesn't go as far as it used to, right?
Yeah. Yeah. What's the biggest misconception there around figuring out what the right number is to get insured, and or like where do they even go to look to realize?
Yeah, we do a report for our clients in the initial phases of discovery where we take their industry, their sales, we ask them some security questions, and we give them a graph that shows like how much risk they're transferring based on what their limit is. So if they get $1 million, for example, we'll show them on the graph like, hey, at $1 million, you're only transferring 87% of your risk. That means 13% of the time you're going to have a claim that's over that $1 million. We think that you should be at like 95% or 97.5%, so that if you get like $5 million, only like 5% of or 2.5% of claims are going to go over that, and people are usually more comfortable with retaining that 2.5% rather than like 13%, right? Because you'd probably buy a lottery ticket if you had a 13% chance to win.
Right. Yeah, it's almost like you're reframing the decision that they're making, which is more to like what level of risk exposure do you want to leave on the table, or like covering that gap versus not even knowing the gap exists.
Right, and we can do that with deductibles too, right? Like so, you don't have to have like a $5,000 deductible. We can lower the price of your policy if you're very confident in your cyber stance, and maybe have in-house people that can help you with initial incident response type stuff. Maybe $100,000 deductible, $150,000 deductible is palatable for you, and we can bring your insurance way down as far as the premium price. And you're just insuring for those 10% times when it goes over.
Yeah. What traditional belief about brokers or brokerage, or maybe a different way of asking this question would be, what belief about traditional brokerage had to die so that risk reduction, well, actually almost what I'm hearing you decide is, or what I'm hearing you describe is, the way your process works is almost like you're a risk reduction architect in a way. Like you're creating clarity around where there's so much ambiguity. Like what had to shift in the way that you thought about being a broker from a traditional model for that part to emerge?
That's a good question. It was probably, I did a program through Chubb and Carnegie Mellon to get a CCIC designation, and they were it's a really good program if brokers are out there that are interested. And there's also a CISO program that they do as well through Carnegie, and they really focused on risk management and risk transfer because our job is to explain the risk to our clients. We need to know as much as we can about them, and that's why we give them these long applications, so we can find out more about them. But I think good brokers go beyond that, and they learn like how they're doing business and what they're doing beyond what's on that piece of paper, so that they can better explain like the risk. And I'm lucky that I have access to some tools like the that risk quantification tool,
right?
And I would say part of that is just being able to talk at a business as like a level where you're like peers with the business, the CFO, and not like insurance salesperson,
Yeah.
as like a business owner too, that understands how risk goes and what they're trying to do. Like they're trying to make a profit. They're trying to do sales. They're doing all these other things.
Mm-hmm.
And my job is to just help them understand like what's on the downside and
Yeah.
how do we limit that downside as much as possible by transferring that risk to the insurance company.
Yeah, for sure. It's like helping them understand that hope is not coverage. It's also not a strategy, and that transferring the risk is the way that they can almost like earn that discount by securing what they already own, but also uh, like future pacing it a little bit too, right? I think that might be an area that you would catch on that kind of assessment that you were talking about, is like I might be whatever a $5 million company this year or last year based off of that data, but I'm also growing at 30%. And so like how do I keep um, future pacing my coverage to ensure that it is future pacing the timeline where I may have to make that claim as well, where it's out in front, because I could see where that would almost be challenging, because I'm looking more through the rear view mirror of measuring based off of whatever history or P&L or something, right? Rather than, well, shit, I am growing at 30% or more. So how do you protect that whole footprint through that next year of coverage or whatever the term happened to be?
Right. Right.
Yeah.
Because everybody's taking business risk, right? Like
Mm-hmm.
you're doing these new initiatives, you're investing in marketing,
Yeah.
and you don't know if like it's gonna pan out, or if you're gonna get an ROI on it. And
Yeah.
that's not really insurable, but there are risks that are insurable, like the back end. Where
Mm-hmm.
like you're gonna do this new thing, and you're new at it, and there may be some risk on it, and if you screw up or you perceive to screw up, then we
Yeah.
need to have insurance to protect us for unforeseens, right? Like the
Yeah.
stuff we don't even know we don't know.
Right. Yeah. Where most of the risk actually lies.
Right.
What you don't know, you don't know. Man, this conversation alone has me realizing how little I actually know about your expertise and the expertise that you need to navigate these conversations, and also how much it continues to change. Right? I mean, it's probably been a year and a half since I was sitting in that seat having to figure this stuff out, and obviously some things have changed in those 18 months as well. Uh, and so now I have all these open loops in my head about what that process looks like and everything else. But if people want to lean more into your expertise, what or now they have open loops in their head too, where's the best place for them to engage with you or find more about you, Joe?
My LinkedIn, Joe Erle. And also, you can email me, joe@c3insurance.com. We have great programs. We have like a discount program for MSPs. We have a backpack program where MSPs can, also add insurance to their lineup for certain stacks that they are selling.
Mm-hmm.
And, we love to partner with MSPs to be that risk transfer part of their protection. Because, you can avoid risk, you can mitigate it, or you can transfer it. So
Yeah.
we want to make sure that our businesses are fully protected, and we need you. We need to work together, right? Like it's not like we need insurance, so now we don't need to do the security part, or we've got all this security, we put our dollars into that, so we don't need insurance. We need both, and we need to allocate our budget so that there's money for both, because even if you have the best cybersecurity in the world, like look at JP Morgan,
Mm-hmm.
Target,
Yeah.
A handful of other big companies, United Healthcare, that have billions of dollars going to cybersecurity, you could still get hacked.
Right.
So you need that insurance for that back end. You don't know what you don't know type risk.
Yeah. No, great point. Last question is every guest gets to leave behind a question for the next one. just like you got to experience at the Open. So if you could leave one question behind for the next guest, what would that question be, Joe?
I should have thought of this before the event because I know you always ask this. I would say, when you talk to customers, how do you get them to understand their risk?
Yeah, that's going to break some people's heads.
I hope so. I hope
Yeah.
so. That's my contribution to the podcast there.
Yeah, no, I appreciate that. Awesome. Joe, thank you for coming on this episode of the MSP Insider.
Oh yeah,
And
one more thing.
go ahead.
I forgot to mention the podcast that we have. Right,
Yeah.
you're a guest, and you'll be on in a few weeks. It's called Ransomware Rewind. Ransomware Rewind. We're on YouTube, Spotify, and Apple.
Awesome. So go check it out. Go discover all the things that you don't know as an audience, just like I did in this one conversation. Joe, thank you for coming on the show, and thank you for the audience for tuning in.